Ever wondered why SoFi's stock jumped today and then took a hit after hours? What's the real story behind the market moves, the partnerships, and the sudden selling activity from big institutions? Let's unpack what really happened, because this is more than just price action. It's a glimpse into the psychology of Wall Street, the power of sentiment, and the hidden signals that most investors miss. Today, we're diving into everything that moved SoFi stock, from intraday momentum to late evening news shocks. Whether you're a SoFi bull, bear, or simply watching from the sidelines, you'll want to hear the full picture. Hello, everyone. Welcome to Daily Stock Update. If you are new to the channel, be sure to subscribe to the channel and turn on post notifications by hitting the bell so you never miss any of our uploads and also enter our giveaway. But before that, alert, this is not a financial advice video. Let's start with today's performance. SoFi closed up about 2.58%, which on the surface might not seem like a huge deal, but there's more to this move than meets the eye. This uptick wasn't isolated, it was driven largely by broader market enthusiasm. Why the optimism? It stems from an economic indicator that didn't perform well. Ironically enough, we're talking about the University of Michigan Consumer Sentiment Index, which came in lower than analysts expected. Typically, weak consumer sentiment would be bad news. But in this strange macro environment, bad news can be good news. Why? Because a struggling consumer gives the Federal Reserve more reason to consider interest rate cuts. And guess what? Wall Street loves the idea of cheaper borrowing costs. As of now, there's nearly a 67% probability, yes, 2/3 of a quarter-point rate cut in the July 30th Fed meeting. Not June 18th, July 30th. And this expectation alone was enough to send growth stocks like SoFi higher. Lower rates mean cheaper loans, higher profits, and increased valuations, especially for fintech players like SoFi. But that wasn't the only thing that gave SoFi some lift today. The company also announced a new partnership, though not one that should make anyone sprint to their brokerage app. It's more of a slow burn. The deal involves offering Tennessee residents aged 18 to 24 a small incentive to begin investing, $5 in stocks of their choice, completely free. On top of that, there's an opportunity for selected individuals to receive up to $1,000 in stock through grants. It's a clever strategy to bring young people into the SoFi ecosystem, hook them early, and maybe they'll become long-term users. Is this a revolutionary announcement? No, but it is consistent with SoFi's broader game plan. Embed the brand into people's daily financial habits so that it becomes the go-to platform throughout their lives. Unfortunately, the good vibes didn't last into after-hours trading. SoFi stock slid roughly 2.3% after the closing bell, and the cause wasn't even specific to the company. The entire market took a hit after Moody's, the credit rating agency, downgraded the United States due to mounting debt levels and rising interest payments. It's a macroeconomic issue that casts a cloud of uncertainty across every sector, not just fintech. And when uncertainty strikes, big institutions often move first. That's exactly what we saw. Massive blocks of SoFi shares were being dumped shortly after the Moody's news broke. I'm talking transactions involving 14 million shares, 19.6 million, and more. Huge volumes. It's not subtle, and it's not a coincidence. In fact, when you check SoFi's trading logs, you'll see a pattern. Institutions sold off heavily before the downgrade became public knowledge. And yes, that's fishy, but that's the market we live in. If you flip over to the options data, the plot thickens even more. The total volume in call options, bets that the stock will go up, hit about $11 million today, while puts, bets that it'll go down, totaled only $3.36 million. Almost half the entire day's option volume leaned bullish. But again, here's the twist. Right before market close, a large number of bearish trades started pouring in. Options expiring today at strike prices of $14 and above? Worthless by end of day. Over 100,000 contracts at 15, 36,000 at 14 all ended up in the trash. That's the risk and reality of trading options. However, there's still some optimism for next week. 10,000 contracts at $12, 21,000 at $13, and 17,000 at $13.50 could provide a floor of support if momentum picks up again. Now let's talk short sellers. Today, we saw that over 108,000 short shares were returned, which means bears might be backing off a little. Not a huge move, but it's noteworthy. The total short interest still stands at around 13.5% of SoFi's float, translating to nearly 147 million shares shorted. That's a large bet against the company, but the fact that some shares were returned could be a small sign of confidence in the near term. Despite all of this, SoFi is trading in a very tight range technically. It closed at 13.92 cents, which is right between its R1 resistance level and its pivot point. More importantly, it didn't break above its 100-day moving average, which sits at $13.73. Ideally, bulls wanted to see a close above that red technical line. Unfortunately, we didn't get that today. SoFi stock may now hover around that moving average until some clearer catalyst comes into play. Now, let's address analyst sentiment. There were no new upgrades or downgrades today. Nothing fresh from Wall Street. The last major commentary came yesterday when KBW gave SoFi a $9 price target and a sell rating. Not exactly what bulls want to hear, especially from an analyst with a 65% success rate. Still, that rating didn't sway the broader market today, as technicals and macro factors played a much larger role. Here's one thing to watch. The Relative Strength Index RSI has dropped from overbought levels to more neutral territory. That could be a blessing in disguise. It means the stock is cooling off a bit, which may set it up for a healthier bounce next week, especially if macro headlines stay quiet. So what should you take away from today? Well, the bullish move during regular hours was mostly about rate cut hopes and a strategic youth-oriented partnership. The after-hours dip was caused by macro fears, not any direct fault of SoFi. But the reaction from big institutions, the options behavior, and the technical battle around that 100-day average tell us this: the smart money is playing chess, not checkers. And if you're an investor, whether short-term or long-term, you need to pay attention to these subtle signals. Friends, that's all we have for you today. What is your opinion about today's video? Get involved and let us know in the comments down below. Thanks for watching.